to today's high-velocity explainer. We are mapping out the ultimate tug-of-war going on right now between macro geopolitics and the micro-actionable technical levels driving today's market. If you are steering capital through all this noise, you are exactly where you need to be.
You know, the mood on the trading floors right now is caught in a massive storm of mixed signals across every single asset class. We've got optimism battling anxiety. And honestly, the market is effectively trading headlines one coffee break at a time. Let's dig into what's actually moving the needle.
Section 1, Global Markets and Geopolitics.
Geopolitics is absolutely front and center today. The Middle East oil route, specifically the Strait of Hormuz, is acting way more like a revolving door than a locked gate. Iran is throwing out threats about closing it up, but tankers are still flowing, and peace talks are technically still alive over in Switzerland. So what's the market reaction? Well, this tension has bounced Brent crude right back up above $82 a barrel. Meanwhile, we've got a distinctly hawkish tone from the Fed, which is pushing gold down below $14.50. And Wall Street futures? Yeah, they've opened under some pretty notable pressure.
Section 2, Central Banks and India. Let's look at the stark divergence playing out globally right now. In the West, the new Fed chair, Kevin Warsh, is debuting with a major pivot. He's ditching the old forward guidance playbook, prioritizing hard data over traditional dot plots, and basically signaling he's totally fine with tighter financial conditions. Over in the UK, the Bank of England is just holding steady at 3.75% while their fiscal backdrop deteriorates. But then we look at India. Indian markets remain an absolute bastion of stability. Despite all these global crosswinds, Indian bonds are holding steady, backed up by solid RBI liquidity measures, and we're seeing really active value buying in equities. Honestly, sometimes boring is beautiful. Section 3, Technicals, the dollar index and the euro. All right, let's drill down into the micro. For the dollar index, the major catalyst today is Fed Governor Waller's scheduled speech. It's effectively the only major U.S. data point we have on deck. Now, with the Fed's new regime clearly hanging on every piece of data, our tactical view on the DXY remains a very definitive buy on dips. The DXY slipped below the 100.89 pivot late yesterday, testing highs we haven't seen since May. We also saw the U.S. 10-year yield slip slightly to 4.45%, but listen, if you're a buyer looking to step in, that 100.57 level is your critical immediate support. Watch for a solid bounce right there to go up and challenge the overhead resistance waiting at 100.89 and then 101.41.
Shifting gears to the euro, we've got ECB President Christine Lagarde stepping up to the mic at 3 different events today. Her tough rhetoric is increasingly slamming into the structural reality of a very fragile, uneven economic recovery across the Eurozone. Because of that clash, our tactical view here is strictly sell on the rise.
Tracking that recent fall in the DXY, Euro-USD did bounce back above the 1.1447 mark. But keep in mind, with Eurozone sovereign bond yields climbing, mostly due to a flight from duration amid those Middle East concerns, this bounce looks really fragile. Look for sellers to step back in at that key resistance level of 1.1483. On the downside, that recent low of 1.1411 is offering a much deeper, hard floor of support. Section 4, Technicals, the British pound and the Japanese yen.
The pound actually recovered from near its yearly lows recently. A huge talking point overnight was Greater Manchester Mayor Andy Burnham's commanding 54.8% victory in the Makerfield by-election, seriously bolstering his political clout. While this was happening, UK 10-year yields jumped nearly 10 basis points as the market tried to digest these political shifts alongside central bank guidance.
Much like the euro, the tactical play for the pound is to sell on the rise. You've got to carefully watch that rigid 1.3265 ceiling for a rejection and definitely keep the 1.3150 floor in mind for your downside targets. Okay, let's talk about the yen. 160.55. That number is absolutely critical right now. The yen continues this agonizingly steady upward grind, and it's trading perilously close to the official Bank of Japan intervention zone. Just look at the price pattern since that April 30th intervention, when the pair completely plummeted from 160.55 all the way down to 155.60. Since then, it's just been grinding right back up, even with a rate hike. So, dollar-yen remains a buy on dips, targeting 161.94. But here is the massive lingering risk. It is not a question of if the Bank of Japan intervenes again. It's purely a question of when. Keep a very tight stop around that 160.55 support. Section 5, Technicals, USD/INR and the Nifty 50. Bringing it back to Indian markets, the rupee ended mostly unchanged at 94.32 after a super choppy session. It actually climbed to 94.21 early in the day as long dollar positions started unwinding, but it gave up those gains later thanks to index rebalancing outflows. Remarkably, though, the rupee just wrapped up its best week in 11. Foreign debt inflows cleanly offset the broader weakness we're seeing in regional currencies. With global geopolitics and oil acting as the ultimate drivers here, your tactical view should be firmly range-bound and choppy. Keep a very close eye on immediate support bouncing off the floor right at 94.06, with sellers likely stacking up at the 94.51 resistance line. Over to equities. The Nifty finally snapped a 5-day winning streak, closing at 24,013, down about 0.64%. The major drag here? A brutal sell-off in the IT sector, which tanked 3.6% right after Accenture released some weaker-than-expected forward guidance. But look, despite that IT drop, the broader market structure is still highly constructive. The index actually recovered nicely from the day's lows thanks to some active value buying. So the smart play is still to buy on dips. The fall found really strong pivot support right at 23,900. As long as that floor holds up, our next upward target is set at 24,344. If it breaks, look below to 23,732. Section 6. The week ahead. Data meets diplomacy. Looking ahead, this week presents a massive, crowded intersection of market catalysts. We've got crucial US PCE inflation data, which is the Fed's preferred gauge, coming out alongside preliminary PMIs that will give us a real-time snapshot of global growth from the US, the UK, the Eurozone, Japan, China, and India. Add in a whole chorus of central bank speeches and relentless updates from the Strait of Hormuz, yeah, volatility is practically guaranteed. And that leaves us with a really critical thought to chew on before the opening bell rings. We are standing at a major crossroads where hard data meets diplomacy. When the economic numbers and geopolitical sentiment inevitably clash on the charts we've just covered, which signal will ultimately dictate your tactical strategy today? Keep your levels tight, stay focused, and trade smart.